All right, this is Kerry Artech with Artech Advisory, and this is the AgriTalk video supplement for Monday's show, November 9th. Before I jump into the charts, I just want to remind you, if you go to my website, you probably already have if you're watching this video, click on AgriTalk, and then at the bottom of that AgriTalk page, you've got a sign-up form where you can submit your name, your email, phone number, and even a message telling me about yourself and what you do. I'd love to have you take this for a 2-week test drive. Even if you've taken a free trial before, if it's been at least 6 months, I give you another 2 weeks, no questions asked. It also includes a consultation call. I talk to you about the markets you trade and the way you trade, if you hedge, if you speculate, whatever, so forth and so on. And we can go over some of those market dynamics. But let's jump into analysis for today. I'm covering December corn, January soybeans, and December live cattle. Now, December corn, I've got a trend-defining support level for this contract only, December contract, this week at 399.5. This is an ascending 1/3 speed line that uses the August low against the recent high in October of 422.25. It actually held beautifully last week. It's at 399.5 this week. So yeah, we rallied up into late October, put out a 422.25 high. The market actually put out a key reversal high that week, which is often a sign of impending weakness. But the market is digesting that event, if you will. And in fact, holding above 399.5, we can continue to consolidate. And in fact, a bullish bias really continues into later December contract life. This little line up here is in the mid 460s. This is our long-term resistance area, regardless of whether it's the December contract, the March contract, the May contract of 21. And I'll get to that in a moment. As far as the December contract is concerned, it has its own sort of resistance at 320. This is actually 424. My apologies. At 424, even this high back in April of 18. We came close to it again July of 19, and also very close to it again just recently a few weeks ago. So getting up and over 424 even. I might as well change that for the video itself. Getting up and over 424 even. Especially if we did at the end of this week. And I don't see that happening, but you never know. If we close above 424 even at the end of this week, it's not out of the question to reach into the 465 area by December expiration, where I might add, excuse me, the broader market encounters significant long-term resistance, able to contain buying into summer of next year. This 465.25 formation does, by the way, remain sort of a 5 to 8 month objective anyway, following the recent buy signal above 366.25. If you've been listening to the show for some time, you know that last March I had a significant long-term sell signal below this formation, and it held beautifully for several years. And then having closed back above it, it was a sign of strength. In other words, a failed long-term sell signal is, in my book, a valid sign of strength over the months ahead. And so I still eye 465.25 as an ultimate objective that can be realized, should be realized between now and, say, summer of 21. And if, in fact, we continue holding, as I say, above this 399.5 speed line, it is conceivable that we could get there by December expiration, but we really do need to settle up and over this 424 even area to make that a real possibility. Downside, if we close below 399.5 at the end of this week, the December contract has indicated a good high through the rest of its life, and the next 3 to 5 weeks can, and I think should, test that long-term support I just showed you a moment ago at 366.25. Significant floor of support that is actually backed up by the December chart's own support at 359.75. So I'm just going to call it the mid 360s, because by that point in time, this line will be there. 366.25 that I showed you here, if tested, can absorb selling well into next year, and as I say, above which 465.25 remains a big picture target. Let's move on to January soybeans. If you've been listening to the show, you know that since August I've had a buy signal above this 939.25 channel top, anticipating 1140.5. Now at the time I called this a 3 to 5 month target. Yeah, we're about 3 months into it right now. And so September, October, actually a little over 2.5 months into it, and we're almost testing it right now. 1140 half, this structure able to absorb buying well into 2021. From here, the market can, once tested, rotate south back into the 930s again. What I like about this 939 formation in terms of support is its rough symmetry with a series of highs from a consolidation pattern that played out for several years. So yes, holding below 1140 half, once tested, the market's susceptible to falling back into this zone within a matter of 2 to 3, 3 to 5 months, where I might add by that point in time, say spring of 21, it can absorb selling into next summer. But, there's no real clear sell signal. If we test 1140 half, we do or would have a series of stair-step sell signals on the way down, which I can show you right now. Now, these numbers can change and will change with every new high, and it's a very dynamic approach. But right now, 1051 3/4 is my support that if tested this week can absorb selling through next week, and above which 1140 half is likely over the next 2 to 3 weeks. If we close below 1051 half, that would signal 2 to 3 weeks, 1008 half, which is a midterm support structure able to contain selling through the balance of January contract life, maybe even through winter trade. Once we test this, we could rotate back into the 1140s within a matter of a month, 2 or 3. And finally, closing below 1008 half would indeed indicate 939 1/4 within a matter of 3 to 5 weeks, where we can bottom out into next summer. So as I say, just because we test 1140 half doesn't mean we're destined for the 930s. We would need to elicit a series of stair-step sell signals on the way down. On the other hand, and there's a big on the other hand here, if we close the week above 1140 half, this market maintains a decidedly bullish dynamic well into next year, spring, summer. I'm contemplating the possibility of a 1437 1/4 summer 21 high if we close this week, for instance, above 1140 half. That would give us a full 6 to 8 months to reach this upper area, and I think it's quite realistic. Finally, let's talk December live cattle. I'm going to erase this for the time being. If you've been following my newsletters, if you've been listening to the show, you know that in July I had a longer-term buy signal above this long-term descending 1/3 speed line that at the time indicated the 123, now 122 handle resistance. At the time I was mentioning 2 to 3 months. We are now clearly 3 or 4 months into that buy signal, and we've been trading sideways, doing these sort of meaningful rotations inside of this wide range since then. And then most recently, 2-3 weeks ago, we retested this long-term speed line. It's a convergent area with an ascending channel bottom. This week at 101.55 to 103.45, it represents a 2-point range of support that can absorb selling through winter trade, and still above which expecting the 122 handle resistance over the coming months. If we close this week above 112.92, then we're a matter of weeks away. This 122.75 formation then considered a realistic 3 to 5 week objective. And what I like about this ascending channel top is it converges very soon with this 122.97 longer term structure. And if tested, 122.97 can absorb buying, broader market live cattle buying pressures into next summer. And once again, closing above this 112.92 formation, which is changing on a week-by-week basis, and I actually even cover this on a daily basis in my daily live cattle letter, would elicit a buy signal that'll play out really into December trade. Until then, know that this 112.92 formation can absorb buying through the balance of December contract life. And from here, it doesn't take a rocket scientist to see that we could certainly fall back to this channel base at 103.45. This is the channel base here. There's a lot of things going on down here, but just know that holding below 112.92 does allow bearish rotation once again, as we've been clearly doing for several series now of rotations over the last several months, and that can continue below 112.92. We can just as easily fall back into the 101 to 103 handles over the next 3 to 5 weeks as settle above 112.92. But As I say, the 122 handle remains a big picture objective, so odds do slightly favor a settlement above 112.92 to set this market on a bullish course through the balance of the year, the 122 handle then anticipated over that time horizon. And that's really all I'm going to say for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.